you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Aloha, everybody. This is Harold Green of Braintree Financial Group. And man, it is time to stop doing what you hate. I hope this show finds you doing well today. And, I'm excited to be sharing with you folks as always. Man, it's been interesting. So I just want to share a little bit about what's been going on. So took a trip up to New York and, had a chance to watch my daughter graduate and from Syracuse University with her degree in architecture. And so we're getting excited for her. She's going to be going off to grad school. It was just a really neat time to be able to hang out in NYC. A lot of people say that's a crazy place. And yeah, depending on where you at, you always going to find some action going down in New York. But, you got to protect yourself, stay safe, and, keep your head on a swivel all the time. And while I was there, I was working and I was part working, part hanging out with family and doing things like that. And but before I continue on with that, I want to give you guys the title of today's show. It is No Pain, No Gain. No pain, no gain. We're going to talk about that a little bit. And then I'm going to swing back through a show that I did before titled Capacity. And we're going to talk a little bit about that. But yeah, New York was cool. And I was working up there and something happened. And, I talked to my clients about this stuff in my newsletter, just this past one that's coming out. And if you're not yet on our newsletter list, do me a favor, get in contact with our office, 808-521-4401. And just talk to Beverly and say, hey, I want to be on the newsletter list that comes out periodically. Anyway, something happened, and it's kind of getting into the no pain, no gain, but it's something that the major players on Wall Street are always looking for whenever, the markets are, in turmoil. And it's a word they call capitulation. And capitulation is when the investor says, you know what, I give up. I can't take any more of this pain. I cannot take any more of seeing my money go down the tubes. I can't take it. I can't handle it. I just want to quit and sell what I have and just kind of hang on to what I have. And, as soon as there's major capitulation in the market, these guys come out with their knives and they start eating up, and they start buying up stuff that you just sold. Because when you do that, when the market capitulates, it makes it super cheap and affordable for the big money who's kind of been sitting on the sidelines, watching everything unfold. Maybe they caused some of this in the first place and they got their money out. Now they're sitting there just kind of waiting on the downdraft. And as soon as it happens, there's just this point. And what capitulation normally looks like is when the market just sells off real bad at one time. But if you kind of go back at the beginning of the year and just kind of watch, it's been a sell-off of proportions, but it's just kind of been an orderly sell-off, just kind of like down, 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 down. And so I want to get into this no pain, no gain. Are you ready? 1, 2, 3, let's get it. And I want to talk to you about how you cannot fall into this trap where you just give up and you quit. And that's a scary place to be, because a lot of times it's more psychological than fundamental, than technical. And I'm not making fun of anybody. Don't get me wrong. There are times where you have to ask yourself this, right? If I'm going to sell everything off, the question is, why was it there in the first place? Right? And there's more that we're going to get into about that in a little bit. But there's some things you can do to make sure that you're not making mistakes and selling at the wrong time. And that's, there's a phrase, they call it buy low, sell high. But too many people buy high and end up selling low. And they just keep taking on massive losses. And that's why Wall Street thinks the average investor is stupid. You just got to look at that. And they prey on people's unwillingness to understand what they're doing. And that's a big deal. And so we want to look at that. We want to make sure that you're not putting yourself in that situation. And so I'll talk to you about ways we can keep you from having to, sell stuff that you don't need to be selling right now. And it all boils down back into capacity, right? How much can you handle, right? How much can you handle in regards to what you see going on? And I want to talk a little bit about some of the things that are happening in the world and how that's affecting people mentally spiritually, emotionally, and it's causing them to make decisions that they normally otherwise wouldn't make. It's causing capitulation in a lot of different areas, whether they're giving up on jobs. And that's another thing. Last month, 4 million people quit their jobs in the United States, right? This is some crazy stuff. We're talking about a recession, and you got 4 million people who can afford to quit their jobs. I don't know who's really throwing this recession stuff out there, and I don't know why they're wanting a recession. And you know what I think it is? I think, in the day and age we live in, when you got robots that are selling based on news, these guys know that. And so they put out negative news, the robots sell, right? They put out positive news, the robots, they buy. So, and it's like this massive manipulation that you as an investor and someone who has financial goals and different things like that, you can't buy into any of that. You have to have a plan. But back to this capitulation thing. So people are selling off their stocks at the wrong time. They're quitting their jobs at the wrong time. They're giving up on their relationships at the wrong time. There's a lot of things. They're deciding not to go to college at the wrong time. And it's just all about really the capacity, how much people can handle, like, mentally, physically, spiritually, emotionally. How much can you handle? And back in the show called Capacity, one of the things I talked about is when times get tough, you have to figure out, do I need to increase my ability to handle this, right? Am I going down the right road? And if you're going down the right road and it's painful, then you have to figure out ways to make it not so painful, because it is going to hurt. And anytime you want to be successful in anything, it's not like you're going to go down to the store and buy to the five and dime and buy a $5 scratch off, or a $10 scratch off and win $40 million. That stuff hardly ever happens. But I see too many people wanting that. They want the easy way. They want the easy way to success. And I was in Whole Foods the other day shopping for groceries, and the aisles are kind of small at the checkout thing. And, this lady just kind of like got all up in my space because she was trying to get a video of her daughter and her friend like walking out of Whole Foods saying some stupid stuff, and maybe they were looking for something to post on the internet. Like, that stuff is really starting to get on my nerves, where everybody's wanting to be a TikTok star, a YouTube star, without really understanding what the hell they should be spending their time doing. Like, everybody wants to be movie star famous because it's so easy now to start putting stuff on the internet and making money from it. Now, that does take a special skill and a special talent, right? You can't just be a nobody and do stuff like that unless you have some kind of something that somebody wants. And I don't hate on people who make money doing that, because it's a skill, right? They figured out how to monetize their gift and make money. But there's too many other people that should not be doing it. They should be cracking a book, studying something. They're finding something else to do. But you got these parents who are just helping kids like feed into that. And I'm like, okay, I'm just going to keep my cool, pay for my groceries, and get the hell out the store before I get upset and get in a bad mood and just ruin my weekend. But again, things can get tough at times. And you got to understand, if I'm going down the right road, how do I need to, what skills do I need to better handle this, right? Because sometimes the skills that you have learned to handle one situation are different than the skills that you're going to need to have to handle a different situation. And this kind of goes back for me, back to what happened with COVID first hit, when the market just sold off like crazy. And I did a lot of studying about stuff. And then I looked at the economy and I looked at why there was massive sell-offs in the first place, and whether or not it made sense to sell and wait or to rotate. And those are two strategies that I use in some situations where if it's in an IRA, I'll sell and wait because I don't have to worry about the capital gains or anything like that. And then basically I'll sell and wait and then buy back in based on certain things, certain technicals, and so on and so forth. Or just like causation, like what I think is actually happening, what I'm hearing, and then study that stuff out and then like put it all together, right? So I looked back at that and I said, okay, now's the time to buy, because capitulation had happened, right? It was like a major sell-off. And then guess what? May, June, July, man, stuff just started skyrocketing back up. And I looked at it, but this time the capitulation was a lot different. It happened over a long period of time where it was like 8 weeks. The market just, went down 8 weeks in a row or something like that. It was just crazy. People just selling. You know what? And it wasn't just the retail investors that were capitulating and selling all their stocks and waiting. It was major institutions or investment advisors who had lost faith in whether or not they think the Fed was going to, be able to orchestrate a soft landing, right? So I'm sharing with you folks all this stuff because I want you to understand how to digest the news that you hear, okay? How to digest the news that you hear because it is painful. But in order to help ease the pain, here's what you have to do. And I'm going to tell you what I did. So when I heard the words recession, I thought about what a recession really was. What is a recession? 2 negative quarters of GDP. And I thought about it and I said, well, why are they looking at a recession in the first place? Well, the first quarter, things had slowed down. And then the second quarter, they were predicting slowdowns again. But the question is why? Why were things slowing down? Well, number one, there's a lot of people that weren't going back to work, or there's a lot of jobs, right? There are supply chain issues caused by China and their zero COVID stuff. So they're looking at all that and saying, okay, this is all bad. It's probably going to cause a recession. And the Feds were looking at raising rates, and the market had priced in like 7 or 8 rate hikes, and they're talking about taking rates to 3-4%. The federal funds rate. It's like, wait a minute, okay, like don't the government have debt too, right? And so if they raise interest rates on debt, period, guess what? They're raising interest rates on their debt, and guess what? They got to service their debt. In order to service their debt, where do they get their money from to pay their debt? I was like, okay, this doesn't make sense. And so the Fed has a mandate of low inflation and gain, like full employment, right? They want everybody fully employed. And so they're looking at that, and I'm thinking, okay, so if they raise rates, who is it going to hurt the most? Well, it's going to hurt the people the most that are at the lower end of the spectrum. And so, but their goal is not to hurt those people because that's their goal. They don't want to hurt those people. And so if they raise rates, these people are now paying, higher gas prices. And guess what? A lot of them are having to put it on the credit cards, and credit cards, they charge interest. So when you raise the rates, these people are going to get hurt the worst. And then plus we're in an election year, and a lot of times certain people lean one way. And so I'm like, wait a minute, they can't raise rates like that many times. It's just not possible. And they don't want to cause a recession. So this thing is probably going to back off a little bit. And that's what was going on in my mind over a month ago when the market was just selling off like stupid, because selling begets more selling. So I started buying more Tesla, buying things like that, and just kind of buying it on the way down because it was super painful to do so. But I just said, you know what? A month later, 2 months later, 3 months later, this is going to be different. And then they come out and they started attacking Tesla because of just a lot of different stupid reasons. And people bought into that, and they ended up selling their Tesla stock, and they made it cheaper. And I talk in my newsletter about that and what happened with that, and how if you bought when it's down, you're going to make money, right? And so you have to look at all these things, and you have to understand where the pain is and why it's painful, right? And it doesn't last forever. And so one of the things I talked about was, how do we avoid getting pulled into the downdraft of capitulation where everybody's selling? And this is important. Here's some key questions you're going to have to ask yourself. Number one, how will selling my holdings now benefit my overall financial plan, right? I sell everything now. How's that going to benefit me down the road? Because you got to understand, capitulation is an emotional thing. People aren't looking at the technicals and saying, yeah, the technicals broke down, the 20-day, the 50-day, the 100-day, the 200-day, the fundamentals are breaking down. No, people aren't looking at that stuff. When they sell everything, they're feeling crazy, they're feeling emotional, and then they make these decisions, right? The second thing you got to ask yourself is this. If I sell now, how can I tell when it is safe to get back in? How do you know when to get back in? Some people, they're still waiting to get back in. And the market's going up like 10, 15% in certain stocks. And they're still waiting to get back in. Number three, how much of the account that's being sold is needed over the next 3 to 5 years? I told a client the other day, she has about $1 million in her account. And I said, how much of this $1 million do you need in the next 2 to 3 years? And she's like, probably none of it. And I'm like, well, why would we sell it all now? She said, it doesn't look good. I said, it only looks bad if you're going to sell is bad. I said, but we're not selling right now. I said, we're buying. And I said, don't you like buying things on sale? Or do you like overpaying for things all the time? Everybody looks for the deals all the time. But when it comes to the stock market, they don't think so. They think because the stock is down, it's bad. No, it's on sale. And that's when you buy things, is when they're cheaper than what their target prices are. Tesla had a target price of $1,200, right? or $1,500. It went down to half of that, $628 or something like that, right? So why did it have such a high target price? Well, you got these analysts and they're looking at the business, they're looking at the model, and they're forecasting out projected revenues. Now, these are pretty smart people, right? They get paid to do this stuff for real life, like for real. This is what they do every single day. And so when they sit there and they calculate these things out, sometimes they're wrong, but 20 analysts can't all be wrong, right? It's just not how this works. You're going to have some bears in there. You're going to have some bulls in there. That's just not how it works, right? So when you understand target price, the bottom and the top, then it'll help you make better decisions, right? So I said, yes, we're going to buy. And I know it's painful, but trust me, we've been through this in COVID. We went through the same thing, right? So here we are again. I know it looks different. We got other people in power. We got other issues going on. I said, but the fundamentals are pretty much still the same, right? The market still works the same way. Companies still work the same way. Nothing really has changed, right? We haven't gone through a drastic fundamental shift from capitalism to socialism. Well, if we do that, then yeah, you better watch out, right? Things are going to change fast. So I don't think we're going that route anytime soon. So number 5, can I afford missing out on the rebound, right? Can you afford, say your account is down 15, 20%. You know how fast these rebounds happen? They happen fast. And I tell people all the time, you got to be there when they light the fire. Like they're putting gas on it right now. They're putting gas on it and they're about to light the fire. And this thing is going to go boom. And you got to be there when it does that, right? So, and especially if it's in good quality stocks, you definitely want to be there. And what's hurting everybody is people are buying crap stocks. And, crap stocks that, bad leadership, mismanagement. And, the day that the market just crashed, they were talking about like Walmart got hit, Target got hit. And what the analyst came out and said was, this was not about the retail industry. This is more about bad leadership in these companies when they missed the mark and they made bad decisions. That has a lot to do with how a company performs. Number 6, if I sell, what other holdings should I rotate to based on current economic conditions? So if you're going to get out of technology because they're forecasting, higher rates and things like that, well, what's happening right now? Well, energy. Well, should I rotate to energy because we got bad energy policy, which is going to drive up energy even more? So would that be a good play? These are things you have to think about before you make a move. You got to do your research. And then number 7, do I have enough cash to cover my expenses for at least a year? And my short-term account, life insurance plan, or my bank account, do I have the money to handle something like this until things blow over? And I'll be honest with you guys, that's why I built Rapid Retire. We have a short-term bucket, intermediate bucket, and a long-term bucket. And your short-term bucket, that money is there for 3 to 5 years, right? That's what you need for 3 to 5 years. In your intermediate bucket, that's 10 years out. Your long-term bucket, that's 15 years out. So in your long-term bucket, you can afford to buy stocks, great quality stocks that are getting beat up and rotating into those. But in the short-term bucket, we got to do something a little different. And that's how you can manage to run over all of this volatility. And if you're sitting there looking at your account every single day, and you're watching the news and you're watching your account and you're watching the news, like, that's hard, right? That's hard. And so what I tell clients is this: if you're doing that, call me and talk to me about it. Don't just sit there and then just let it nag at you and gnaw at you and nag at you and gnaw at you. You got to call me and talk to me about this stuff. Tell me what you're seeing. Tell me what you're hearing. Tell me what you're feeling. And then I'm going to give you the data that backs up the decisions that we make. And if you want to ignore that and, go with how you feel, that's fine. But that's not how the market works, right? And if you've been in the market any length of time, you'll understand that. So, there's 3 things facing us right now. Inflation due to record spending. That's a fact. That's not something I'm saying. That's just my opinion. There's been record spending. COVID spending was through the roof. There were people that got money for COVID that didn't need it. Some businesses got money for COVID that they didn't need it. And on top of that, they got those loans forgiven so they don't have to pay them back. What do you think that did, right? Everybody was just in such a tizzy to not suffer or feel pain or hurt. Like nobody was paying attention. Then we got bad energy policy. That's a fact. We got more jobs than workers. And so here's the thing. What's happening right now is, guess what? Wage inflation is up. And a lot of companies are saying, you know what? People don't want to work. Fine. We'll get robots in here. And that's a sad thing. So again, what does it mean for your portfolios right now? Guess what? You got to understand where you should be, what you should be holding, why you're holding it. And that's what I do for my clients. And if you're a client listening, thank you very much. I appreciate it. No, it has not been pretty at all, but we've been here before. We've seen things like this, and I believe we will recover. It's not just a matter of if we'll recover, but it's how long it's going to take. So my estimation is it can be anywhere between 6 months and a year. It just depends on what we're buying and what continues to happen in the market. But I always plan on 6 months to a year of recovery. So if you're down 20%, my goal is to recover that within 6 months to a year. These are my goals. I'm not saying they're guarantees. These are my goals. These are the things that I work towards every single day to get my clients' portfolios back on track. So this is where the rubber meets the road. There is going to be some pain, but again, you want the gain, right? Got to figure out how to handle the pain, how to make it easy, how to make it so that it's not as painful to get through this. And so if you're not a client yet, I'd love to talk to you. And I'm just going to put it out there right now. We just raised our a limit in regards to how much money you got to have to work with us. It was $100,000, now it's $500,000. And so I'm just going to leave it at $500,000 right now with very few exceptions. But I will make exceptions here and there. It just kind of depends on your situation. And one of the things I noticed before, sometimes I'll make exceptions for people that don't have the minimum that we need, but then they make my job way harder, right? Because they just make my job way harder because they're trying to give me money that they're afraid to lose. And you can't play this game like that. When you're investing in the market, you're investing money that you don't need right now, maybe 5 years, 10 years, 15 years. If you're investing money that you need right now, that money should be in the bank. You shouldn't have it in a stock portfolio. Again, this is not a get rich quick program, right? Investing takes time. There's a scientific method to it. There's technical, there's fundamental, there's all these different things. And so basically that's where we are right now. So if you're a client on board already, thank you very much. I'm not going to kick you off the train. If you don't have the $500,000, that's not the thing. This is for new money coming in and stuff like that. So thanks for listening to the show. No pain, no gain. Go back and listen to capacity, because sometimes you're probably going to have to enlarge your ability to be able to handle things, because things sometimes they just get harder. They'll get easier, then they'll get harder. You just got to understand that these are cycles we go through. And so thank you very much. I'm still waiting to get into the next show, money problems, mental problems or money problems. I want to talk about that because, 1 out of 10 people in the United States run some kind of medication for some sort of either anxiety, depression. And these are real things that we want to talk about. I want to either find a professional or somebody that can help me go through this topic without hurting people's feelings and make people feel bad for what they're doing. And that's not the intent. It's just to understand, these things can sabotage your financial success if they are not handled the right way. So thank you very much for tuning in. And until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.